as key audit matters. Now, I will come more on the key audit matters and will discuss in more detail what those matters are and what to be reported in the key audit matters and what considerations should go into selection of the key audit matters. But before that, I will also highlight some of the other amendments in the standards regarding the auditor's report. The second actually important element of the change relates to the going concern assumption. Now, going concern, as you all know, is a major judgmental area. It's a major judgmental area in the audit of financial statements, and currently, when there is a material uncertainty or doubts about the going concern, the auditors are required to report in their auditor's report through an emphasis of matter paragraph about the going concern uncertainties. That requirement has been retained, but the only change is that whenever a situation arises where the auditor concludes that there is a material uncertainty about the going concern, that uncertainty should be explained with an explicit heading, with a very prominent heading, which will say a material going concern uncertainty, and in that heading, you will explain that what is the uncertainty about the going concern, and highlighting towards the note or in the financial statement which explains the total position. Apart from that, there are many situations in the going concern when there are indications that the company may or may not continue the going concern, but on the other hand, there are mitigating factors as well which reduce the risk of going concern to a larger extent. Now, in those situations, the auditors may come to a conclusion that the going concern indications, when considered with the mitigating factors on a net basis, do not represent a material uncertainty as regards the company's going concern assumption. These situations are referred to as a close call situations. Currently, when there is a situation where the auditor is satisfied based on the mitigating factors that the going concern uncertainty is not material enough to be reported, the auditors are not required to give an emphasis on matter paragraph on those situations. But now, the standard is requiring that those close call situations should also be addressed in the key audit matters, should also be explained in the key audit matters. So whenever there is a indication or doubts or factors which leads towards doubt about the going concern assumption, regardless of whether the mitigating factors actually reduce those doubts to a larger extent, and as a result, the auditor believes that there is no material uncertainty left regarding the going concern, still the auditors are required to report those going concern uncertain situations in the auditor's report through the key audit matter paragraph. So that is a change. I've seen in many companies in Pakistan, I think there's a tendency that whenever there is an indication about going concern, now whether or not the mitigating factors are reducing that risk to a larger extent, the auditor's tendency is normally to play safe and report those matters in emphasis of matter paragraph. But point to note here is the auditing standards do not require all situations of going concern currently to be reported, but just those situations where there is a material uncertainty left. Now the auditors are required to report both situations, whether there is a material uncertainty, in that situation explaining through a heading that there is a material uncertainty, and in the situation where there is no material uncertainty but certain factors are present, even that situation needs to be explained through the key audit matters in the report. In the auditor's report, you can find currently there's a paragraph on the management responsibilities about the financial statements, very small paragraph, which says that management is overall responsible for the financial statements and the internal controls around the financial statements and so and so. But that paragraph will also explain now that in preparing the financial statement, it will state the management is responsible for assessing the company's ability to continue as a going concern, disclosing as applicable matters related to going concern, and using the going concern basis of accounting unless management intends to liquidate the group or cease to operate. So, in the management responsibility section, the auditors will state not only the management responsibility about the going concern, but also in the auditor's responsibility section in the auditor's report, the auditors will also state their responsibility about the going concern assumption. So, you know, the auditor's procedures around going concern are not changing, but what is changing is the reporting of the going concern procedures that the auditors have performed in the audited report itself. So the visibility of auditors' procedures around the going concern through the audit report is increasing. Now, other information, as you know, annual reports just not contain only the financial statements, but they also contain various other information and analysis, the director's report, chairman review, management analysis, so and so, and many statistics are presented as well as part of the annual report. Now, the auditors are required and were always required to review that other information. We call it other information, anything which is contained in the annual report but is not the financial statement. So other information in the annual report currently is also required to be reviewed by the auditors to understand that other information is materially consistent with the financial statement. So auditors' responsibility around other information is limited to the extent of ensuring only that other information is consistent or not consistent with the financial statements. We are not required to audit the other information. But what we have performed with regard to other information is never reported anywhere in the auditor's report. So as part of the amendments in the auditing standards, now it is required the auditor's report should also say that what other information the auditor has reviewed in the annual report and what is the responsibility of the management and the auditors for the other information, and whether or not the other information was found to be consistent with the financial statements. So there has to be a paragraph in the auditor's report which will explain what the auditor have done in respect of the other information under the auditing standards. So again, additional reporting. Now the paragraph will look like that management is responsible for other information. The other information comprises director's report, analysis, etc. And we will say that in connection with the audit of financial statement, our responsibility is to read the other information, and in doing so, consider whether other information is material consistent or not. And in the end, we'll say we have nothing to report in this regard, or in cases where we feel there is an inconsistency, we are required to highlight that inconsistency in the very audit report itself. So again, more visibility of the auditor's work in the auditor's report. Other enhancements include, we need to explain now the responsibilities of the auditors and key features of the audit in a more elaborative way. The whole audit process needs to be described as part of the audit report by saying that we have looked at internal controls, we performed risk assessments, we have looked at the financial statement disclosures, so and so. So audit process will be described in a more detailed manner in the auditor's report. Currently also, there is a scope paragraph which presents the auditor's work in a very concise and brief manner, but that will be extended in a big way, and the auditor's responsibilities and auditor's work under the auditing standards will be explained in a very detailed way in the auditor's report to highlight that the auditors have performed, has discharged their responsibilities in relation to financial statements by looking at various aspects of internal control, by looking at the various components of the financial statements, their presentation, disclosures, all the work that has been done by the auditor but be more visible through the auditor's report. We need to also, we are also required to give an affirmative statement about our independence. You know, independence is something which is very basic and very essential to the audit process. And under the ICAP rules, there are ethical standards which every auditor is required to comply with. So whether or not we are compliant with those ethical standards needs to be explicitly stated in the auditor's report itself. That communication currently happens with the board of directors, but now it has to be stated in the auditor's report as well. So let's look at the revised form of audited report, which will be something like that, starting with the opinion first. Now, currently we have a format of audit report where we start with what we have audited, the scope of audit, and the opinion as a bottom line. But now it will be, the sequence will change. The opinion of the auditor will come first, then the basis of opinion, then if there is any material uncertainty about going concern, emphasis of matter if any, then the key audit matters section, the other matters, other information section, responsibility of the management, auditor's responsibilities. Then there is a section which is a separate section dealing with report of other legal and regulatory requirement like we have in Pakistan. There are additional statements and confirmations that the auditors are required to make through the auditor's report, whether books of accounts are maintained properly or not, whether expenditures are incurred for the purpose of business, etc. And certainly the engagement partner name and address and so and photograph if you like. So this is all part of the new format of the auditor's report, which will be very extensive, as you can see. Just to give you kind of a flavor of it, this will be the format of the auditor's report going forward. You will see the opinion paragraph. You can see opinion coming first, then basis opinion, then a section on key audit matters, then other information, responsibilities of the management, auditor's responsibilities. You can see the audit process has been described in a very detailed way, and then the report on other legal reporting requirements. So this is going to be an extended form of the auditor's report, expanded in a big way than the current version of the auditor's report, a one-pager with a bottom line only, whether the accounts give a true and fair view or not. A lot more will be spelled out by the auditors of the company. And let's now focus what will be reported under this section, key audit matters. Let's now focus on that. Sorry. Now, as I said, the key audit matters has been defined as those matters which in the auditor's professional judgment were most significant in the audit of the financial statements. Now, what are those matters? The standard expresses that those matters are arising from three areas. A, the significant risks. What in the auditor's judgment were the significant inherent risks or areas of financial statements which are subject to material misstatements? It is very common in the audit process that we auditors, when we start the audit, we highlight what are the significant risks in the audit of financial statements of a particular company. Those risks may vary from company to company, from year to year, from circumstances to circumstances. And those risks have to be explained now. Now, key audit matters are either significant risks or significant judgments in areas in relation to financial statement, for example, provisionings, impairment of assets, etc., or provisioning against litigation situations, or significant events or transactions during the year. So either significant risks or significant judgmental areas in relation to financial statements, or significant events or transactions which have occurred during the year. These kind of things will actually make up